Hello viewers, it's Isma as usual back again from FX Kampala. In the video today we're going to be looking at a very easy, simple to use Forex trading strategy using 100% no indicators. If you are new to this channel and you don't know what indicators are basically tools a trader can use to identify with the help of their strategy, using them as a strategy in one way or the other, or as a subsidiary, or as a component, an aspect in their own market analysis to identify where markets are ideally positioned. Like for instance, whether they're overbought, oversold, or as volumes when they are trading the market. So in this video today, we're not going to be using any of those, and we are going to trash all of those. So in the video today, we're going to be using basically 100% pure price action. In other words, we're going to be using candles. We're going to be using past data to determine what is ideally, can be our perfect entry for a buy and our perfect entry for a sell. First things first, if you haven't subscribed onto this channel, please do such that you enjoy the content that we happen to release. You can also visit other social media platforms of ours, that is Instagram, Facebook, TikTok, LinkedIn. Just type in FX Kampala, you'll find such amazing affirmative information. Without any wastage of time, as we get directly onto the screen, the first thing that you're supposed to do is to identify the general market direction bias, or what we can consider as the market structure. And this time round, make sure that you are in a bigger time frame. So the pair that we are trading today is USD/JPY, and the market structure is a trending one, and the trend is actually a downward market trend. Now, when you look at this trend, it has gotten the lower highs and then the lower lows, which we can call the impulse and pullbacks, or if it's hard for you to understand, you can say breathe in, breathe out. Like for instance, it's as it projects downwards, it has breathe in, breathe out, impulse, retracement, impulse, retracement. And this key level here that I have put a line below is actually an ideal, an ideal pivot point, strong point that marks the end of the general impulse wave that still marks the beginning of the new this is an impulse pullback, the beginning of the pullback. And now this means that in this time frame that we're in, which is daily time frame, so this point here is actually the beginning, and it's causing the bias of this market now to be bullish. And now for it to be bullish, I know that generally this market is going to go upwards. So this means that I need to look for buy positions this time round. But then not just buying points, but then I have to identify certain levels in my smaller time frame to determine my entry, based upon this bias. So without any wastage of time, the movement here is bullish in the smaller time frame because it's actually generating the next pullback. Now, since this is the point, I identify a key level here, and then I also had to identify another key level here, which worked as a resistance. So having identified this, I know where market is going. I know the market strength. I have the general insight of the entire market formation this time round. So this means that now what I'm going to do is that I'll go to a relatively smaller time frame. So with this strategy, it works with first things first, major pairs. Two, it works with both the daily time frame and the 15 minutes time frame for entry. Daily is for analysis, 15 is for the entry. 3, it works with support levels, resistance levels, supply, demand, order blocks, and so on and forth. So when you come to look at around this particular point here, you realize that we have another block here, and then we have another internal order block here, which are ideal, is as to why I actually put this particular line. But then I will then have to go to my 15 minutes time frame and determine my entry, my stop loss, my take profit based upon this particular strategy. So when you look at this particular strategy, you realize that this is actually the line that I drew there. And for me to know that the general market bias is actually bullish, that will definitely reach out to our general resistance that marks, the resistance point of this trend. So what I'm going to do is I'm going to actually define my entry around this particular level, this particular point. But then when I'm entering, I have to make sure that I put my stop loss below this particular line. And the take profit can be further and further because the general market direction bias is to that point. So the ideal stopping point for this, for candlestick formation, some people would say you come down here around here and you put a buy limit. Others will put a buy stop here. But the reason as to why I'm considering a buy stop at around this particular point, it's because it's the day is around evening time. The market has moved. We have seen the London, and then the American session. So the likelihood or the remaining efforts are going to be brought up by the American market. So I'm saying that it's the reason as to why I actually put a buy stop around that point rather than a buy limit to this particular point. So my stop loss has to be below that particular area of interest, which now brings in the reason as to why I identified this particular line to determine my exit points. And of course, they can as well determine my entry points. Our WhatsApp number changed somehow, and our new number is what I've shared in this video. To contact us directly with our number. Then you can also use our previous numbers that we've been using just for direct calls. They are no longer on WhatsApp. Without any wastage of time, allow me to stop from here. Have a lovely day. Enjoy. Thank you.